FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz at 6/21/19. Well, they didn't cut rates the day before yesterday. However, the stock market and the precious metals market acted as if they did. What is up with that? How did that happen? Hey, first, don't forget we're running our 8th anniversary contest. That's 8 years FSN has been in existence. We're going to pick a winner on July 20th. Last day to get your entry in is July 14th. Pick the price, call the price of Bitcoin on July 20th, closest possible. My guess is 66.50. The winner, you have to get closer than me. The winner will receive 40 pre-US 1965 quarters, value just over $100, but they've been going up pretty quickly lately. First 5 runner-ups get 1 pre-1965 quarter. Email address kl@kerrylutz. Give it your best bet. We've had hundreds of entries. If I can get this thing up to 1,000 entries, I will up this to 100 pre-1965 U.S. quarters. But we got to get 1,000 entries, okay? Right now we got a few hundred. Keep them coming. kl@kerrylutz.com. Well, someone who doesn't need any contest, whose advice is always or mostly on the mark, is our good friend Nick Santiago, InTheMoneyStocks.com. Nick, man, looking at the past couple of days, it's like I feel like I'm living in 2011 again. Price of gold, but the stock market this time is going up with the price of gold, which is pretty extraordinary.
Yeah, it's a central bank desire to inflate everything as fast as they can. It doesn't seem to be working. But gold has certainly taken off. We talked about it the last time I was on your program. I said, once the fear comes in with this May sell-off, you're going to see gold move higher. And sure enough, it was just really a couple days later, and we saw that. And right now, I still think gold, is a little bit overbought short term, could stall here, but I mean, I don't see it not going above 1,400 at this stage of the game. It's putting in a little consolidation for probably the next week or so, and then boom, it should test 1420, 1425 pretty easily.
Yeah, it certainly looks that way. Never underestimate the powers that be. Look, it was up $17 the ounce overnight trading, which usually overnight trading for years, Nick, nothing happens there. Up a buck.
Not anymore.
Down a buck.
We get some big moves overnight now.
That was huge. And then it took all their might, all their effort this morning to drive it back down. I'm not playing conspiracy theory. This is fact. Just look at the trading numbers, look at the chart. Markets don't work that way, Nick. Really, especially gold, and silver, which have been lost for dead. I mean, it's watching those markets over the past few years has been like watching paint dry. Very painful and perhaps toxic to your health.
Well, I will say this. Gold at the moment is overbought. So when the market opened up for when the stock traders come into that desk around 7 o'clock this morning, East Coast time, they're seeing gold higher and they're saying, well, we're too extended here. Let's take some off the table here. Let's lock in some gains. And that's just a natural ebb and flow. So, like I said, I don't think I would make too much out of it. I think we'll get a little bit of a pullback here from an overbought condition. Maybe we'll see gold futures trade down to 1375, 1365, but that really would be the extent of it for me. I ultimately think you got central banks around the world trying to inflate or keep these markets inflated as best they can, and that just gives gold more fuel to go higher. And like I said, 1420 is my ultimate near-term target. So I still think there's more to go.
That's reasonable. It just reminds me of Jaws in that scene where Roy Scheider says, we're going to need a bigger boat. And
that's right.
I think the world central banks got to get a bigger boat out there because things are sinking really quickly. So, we also, last time I spoke with you, you were calling for We talked when oil was 65. You were saying low 50s. I think you said $52 if memory serves me correct.
Yes.
So
yes.
Hit there. Now it's kind of on its way back. But what do you think?
Yeah, so we got a geopolitical bounce here, basically off tensions from Iran and whatever else. The key thing for crude was that it never took out the low from June 5th. Now, that's a key line in the sand. That low that day was $50.60. That was the low pivot. It wasn't the low close. Low close was $51.68. But point I'm trying to make, on June 5th, that was the low pivot. And if we take that out, I will tell you that crude will go down to the low 40s. So I think some people know that, and crude has definitely been defended here around this level. Also, when you look at a weekly chart, you'll notice we hit the 200-week moving average. It was also a very key retrace level. So we're getting a technical bounce in crude right now, and that could maybe with geopolitical events go back up to $60, maybe $61. That would be the maximum I see for crude at the moment.
Interesting. Yeah, well, it's not in Iran's interest to have a war, but it is in their interest to make everyone think there's going to be a war, because that will keep the traders on edge and keep the prices high. Higher prices mean more funds flowing into Iran and less potential for, they hope, for political turmoil and unrest in that country, which there's been quite a bit of recently.
Yeah, and don't forget, there are other countries that have vested interest in higher oil too, mainly Russia and several others too. So you have Venezuela, they're in shambles, as you know. Mm-hmm. So I mean, Iran, all of these countries that are facing big political tensions. The higher price of oil definitely helps out their economy and helps out their leadership there. So we'll see where it goes. Like I said, I still don't see it going above 60 or 61. I think that would be maximum.
Yeah, and let's not forget there's a few transnational countries, i.e. Exxon and Royal Dutch Shell and the major oil companies.
They don't mind it either.
Yeah, they're very content with it to go back up to 100, because their margin, they keep their margin the same. They're going to make their 10% or whatever on refined product, whatever their margin might be, and it varies from every area that they're in. And whatever it is, they make more money when the price goes up. We've seen it over and over again. So, and companies have set this stuff up before as well. There's a lot of people who tend to profit from higher petroleum prices, not to mention the banks in the U.S. They don't want to see the price go any lower. But the whole fracking thing is obviously here to stay. It's obviously becoming more efficient by the day and assuring future production, regardless what happens. Right now, I think we're at 12 million barrels per day. Nick, there's a guy out there who predicted this when we were at 7. He said by this time it was going to be at 12. In the next 3 to 4 years, he's predicting 17 million barrels per day in production.
Yeah. So basically what it's telling you is that the United States is oil independent. I mean, and the move from oil to natural gas is slowly happening, and the price of natural gas continues to decline. Yeah. So, I honestly, I don't think you can really ever get off of fossil fuels, because you use it for so many different things, for chemicals, for paints, for so many different products are made from petroleum. But the truth of the matter is, we do not need as much Saudi oil. We do not need as much global oil. It's just to keep the world moving and flowing that is happening. But the reality of it is, we're going to see in the next few years, in my opinion, and I own a big 4x4 truck, so I don't mind seeing the gas bill go down on that, and I think ultimately fuel will go a lot lower.
Yeah. The reports of the death of hydrocarbons, fossil fuels, is greatly exaggerated. We're in it for the long run. Yeah, I think electric cars are cool, but at this point, they are not the answer. And you have to ask yourself, Tesla's been around, a decade now, and they do have a workable electric car. you got to believe that if Detroit and, the car manufacturing centers of the world went full into electric vehicles, they could bring that price way down. And you do have the Chevy Bolt, but yet it's not happening. And then you have to ask yourself, why isn't it happening? Well, certainly the conspiracy theory of oil companies, car companies conspiring to keep the price of oil low and restrict production of electric vehicles, there definitely is something to that. But there's more to it than just conspiracy theories. And that is that distribution, the grid, everything else, rare earth metals, lithium, all these things conspire. Right now, with the current state of battery technology, it's not there yet. It's that simple. I mean, that $35,000 Tesla, they lose like $7,000 on every car, and that's with a tax break.
FSN Radio. It's all about what's next.
Trilogy Metals is a world-class developer in Alaska's Ambler Mining District. The company already possesses 8 billion pounds of copper, 3 billion pounds of zinc, over 1 million gold-equivalent ounces, and now over 77 million pounds of cobalt. Trilogy's Arctic project boasts an after-tax net present value of $1.4 billion with a 33% IRR. Trilogy is led by an experienced management team with proven success in discovering and developing projects in Alaska. The company is well capitalized, has no debt, and possesses strong institutional support. Trilogy trades on the New York and Toronto exchanges under the ticker symbol TMQ. To learn more, go to trilogymetals.com. That's trilogymetals.com.
The Financial Survival Network. It's all about what's next.
Right. I agree with you 100%. And again, I used to own a hybrid vehicle, and I really didn't find it to be all that sensational, to tell you the truth. So these electric vehicles, they are pretty neat, but they do have to become more efficient. I know the travel ranges are getting better and better, and in due time, maybe they do. But there'll be new technologies also that will emerge in the coming years that will replace even electrical vehicles. So.
Yeah.
I think that's where we're headed. We're in an innovative time in human history, and again, we'll see other things. It's not just that the electric car is it, and there's nothing else. You're going to see a host of different types of vehicles out here in the next 5 or 10 years.
Yeah, hydrogen fuel cells, compressed air. There are competing technologies saying that the electric vehicle is the state of the art, and that's where we're heading, is like saying Bitcoin is the state of the art in cryptocurrencies, and the battle's been lost or won, depending on your perspective, and that it's forever Bitcoin, and nothing could be further from the truth. So interest rates, you called them, you said they're going down, down, down. You've been saying this for months. Now we're getting to 2%, 30-year or 10-year treasuries. We're seeing the 30-year mortgage rate under 4% for the first time in years. This is not a bullish signal on the economy, both in the United States and the world at large.
No, not at the moment. Not at the moment, it's not. And I talked about the charts were telling me we were going to see a 2% on the 10-year, and it really happened basically right after we talked about it. And you saw bond yields really come down. Yesterday, they actually traded below 2%. I believe when it was all said and done yesterday, we saw yields get there and get to 1.9. I think it was 1.97. So today we're rebounding up. I think that bond yields fluttered down here, but ultimately I don't see them going a lot lower now. I think yields have to go higher from here. Ultimately, that should cause the United States by the fall to really, springboard higher. I do think the fall season, the U.S. markets take off again.
Yeah.
And, we continue this backing and forth. And, central banks are, in there manipulating things, doing the best they can. But, the problems really stem abroad. They're not, they're here, they're everywhere. But the big problems are really in Europe. They're really in Japan, to China to a large extent. And then you have a lot of other places, but those Europe and Japan negative rates, it's a disaster. It's going to be a failed science project, and I think we're seeing that now.
Yep. Yeah, for sure. And yeah, time to refinance if you haven't done it already. Buy real estate because they're giving you returns that I work with jasonhartman.com, and you should send me an email if you're interested. But with mortgage rates below 5%, well below, the returns on these properties go into double digits, cash on cash return, not to mention appreciation and all the other benefits that you get from real estate. So this is the time to buy. If you haven't done it yet, you've been holding back, this is what you've been waiting for. You shouldn't wait anymore. Hey, so interest rates, yeah, they can only go so low. I don't think they're going negative.
They're not going down. This is it. So in my opinion, they'll flutter around here. You got a little bit of time, couple of months, but ultimately they're going to go higher now. And like you just said, if you're going to refi or you're going to do anything and you need a low interest rate loan, this is it. This is your chance.
Like we're hitting the bottom. They're going to start reducing lending standards again because real estate sales of existing homes and of new homes have been kind of cratering in places. Not so much Florida, although even here, a slowdown's a slowdown. It's just the business cycle at work, Nick. And I guess the interest rates certainly long-term rates are the ultimate indicator, right?
Absolutely. There's no doubt about it. We live in a world of debt and borrowing, and this is, if you're going to do it, this is your time to lock it in. Don't do something adjustable. Lock it in and take advantage.
Definitely, yeah. Don't do the LIBOR. The LIBOR is so tempting to do, and it has worked so well for the past 30 years, Nick, but almost 30 years, I should say 20. But we're in a volatile market where your LIBOR, you might be fixed for a year or two, and then after that, it resets monthly. You could get severely burned on it. LIBOR will always be less than the prime rate and the mortgage rate quoted by the big banks. However, you have to watch out for spikes in rates because that can be an existential threat to your wealth. Dollar, we already covered that. Dollar is going to stay strong, almost certainly. It's been vacillating, but it's stayed right at that 97, 98 rate for months now, Nick.
Yeah, the dollar is even if we get another dip in the dollar and you see the dollar index, which is a dollar versus a basket of 6 currencies, the dollar goes down, the dollar index goes to 95. I mean, it's a screaming buying opportunity. I don't even know if it'll get down there. So I love the dollar for the long term. I still remain a dollar bull, and any dip you can get, you own dollars. I mean, it's really just that simple. Wealthy Europeans are getting their money out of Europe. Wealthy Japanese are getting their money out of Japan. Wealthy people in Hong Kong are getting their money out of Hong Kong. Wealthy people are getting their money out of China. So where are they coming? Right here to the good old U.S. greenback, and that should remain strong.
What amazes me is the weakness in the Australian dollar. For a decade, the Aussie dollar has been at par with the loonie, the Canadian dollar. Now, the Aussie dollar is almost 10%, trading at a 10% discount to the loonie. This is some big trouble here. Whether Canada's not strong either. Their economy is really in the dumps because they've put up obstacles to Chinese money coming into their real estate markets and investment markets. Really suicidal track they've been on.
You have so many distortions going on, and a lot of it is due to China. So, in fact, most of it. So, when you look at how these markets are intertwining now, it really is rather remarkable. But we're going to have some real big currency blowups in the coming years. Mm-hmm. But right now, everything is still just a trade, and you just look at these charts and you just let them play themselves out. But we do have a lot of distortions out here, but that's a sign of the times that we're in.
Yep, you got it. Hey, anyway, if you want to find out more about inthemoneystocks.com, what are you offering these days, Nick?
Well, we offer a 7-day free trial to our research center. You get all of our trade action, our swing trades, and you get all of our nightly reports. And then we offer a 7-day free trial as well to our intraday stock chat room where you can come in, day trade live with us each and every day.
All right. Very cool. InTheMoneyStocks.com. Check out the link in the show notes. Hey, again, enter the contest. Last date of entry, 7/14. Hey, if we get enough entries, I'll up the grand prize to 100 pre-1965 25-cent pieces, 90% silver. I will up it to 100, and out of my own personal hoard. Not that it's that large, but it's large enough, hopefully, for any foreseeable dislocations. KL@kerrylutz.com. That is the email address. Put in the subject line Bitcoin and anything else you want, but start it out with Bitcoin. We're going to do the drawing on the 20th, right around my birthday. Last entry must be received no later than 11:59 on July 14th, 11:59 p.m. Nick, we'll see what happens. It's always great talking to you. Let's catch up in a couple of weeks and see where the chips fall.
Sounds great, Kerry. Thank you for having me.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.